Thank you. Thanks a lot, everyone. Thanks a lot to AIFA for providing us the opportunity for this session. So I'll try and cover why it's important also to look at alternatives, not just mutual funds, and I'll also kind of uh, this is something which is important for all of you because alternative products are not just, it's no longer an alternative. Uh, it's something which is important, which your clients and consumers and investors have already started taking. That's why it's no longer an alternative. You need to look at this as an option if it suits your investors. So that's the most important thing. If you think your investors are ready for it, which data does seem to suggest that it is moving in that direction, then you need to have this as a part of your offering. Yeah. So normally people will ask, 9 out of 10 times wherever we've gone, people typically ask, why mutual funds? What don't we get in mutual funds that you get in alternatives? That's a very valid question. But it's, people have different needs. For anybody and everybody, I think mutual fund is probably the best and most tax efficient product, and there is no two ways about it. Nobody is saying that alternatives is is better than mutual funds. No way in terms of tax efficiency or the ability to come into a new product for a new investor to kind of come and experience the market. I think mutual fund is probably the best product. Initially, they come into probably a hybrid fund and then usually move on to a starting large cap fund and then move to hybrid fund and then a large cap pure equity fund and then move towards more aggressive strategies. Now, when you kind of look at people's needs, investment needs, typically they have different needs. When you're slightly lower on the income pyramid, what you typically look for is a safety bucket. So when you and what products give you the safety bucket? These are typically the fixed return products, typically from banks, savings accounts, liquid mutual funds, and debt mutual funds. These are typically the products that people will need to satisfy their safety bucket of investment. Once that is done, then people look for the lifestyle bucket. Now, what are the products that they ideally look for when they come into the lifestyle bucket? Is ideally mutual funds, both equity and hybrid. Now, once this need is satisfied, then they progress onto aspirational buckets. This is where you actually find the need for alternative products, and that's where there is a huge opportunity that we see emerging, and investors are actually looking for this as they are progressing up their income pyramid. You would have seen this with literally every consumption item that you kind of see. You will see that typically people's needs keep increasing as their wealth increases, and investment is no different. It's in fact a lot more this is a lot more consumption oriented than any other consumption item that you can actually think of. So what's in it for the investor? It addresses nuanced needs of HNIs and ultra HNIs alternatives. Now, why do we say that? Typically in mutual funds, you have an investor who comes in with even a 500 rupee investment or crores of investment. So the investor pool is very different. The investment need of a 500 rupee investor is very different from an investor whose need is that of in crores. So ideally, when you look at that, you have a slightly more homogeneous pool in alternatives. Second, it offers them very, very bespoke solutions. It's fairly customized. And third, it's not only a simple off-the-shelf product, it's more a service plus a solution. And all of you would agree, the moment you bring in a service or solution-oriented offering, the engagement with the client actually increases multifold. So that's the difference that this product brings across, particularly if you are catering to the HNI or the ultra HNI segment. Now, when you would have started your business, you would have engaged with people who probably would have been middle income, but I'm sure quite a few of them would have, with the wealth generation that's happened in the country, would have progressed on to become HNIs and ultra HNIs. So when their needs have changed, you have to change and give them products that suit and solutions and services that suit their needs. Otherwise, you risk losing that business. That's why that's important. I'll come to you with examples on that. What's in it for distributors? It's a foot in the door. Okay, because you already own the client relationship. It's not that you don't own the client relationship. You've handheld that investor in their journey from basic needs to lifestyle needs and now to the aspirational need. So when you're handheld them through this entire journey, in their phase of when they are satisfying their aspirational needs, if you are engaged with them, then you have the benefit of reaping the benefit on that. Second, it's a very, very differentiated product, offering. It's not a, off-the-shelf product. It's a customized solution. There is a value addition to the client because you're thinking more from a solution orientation, and the relationship actually deepens. So that's something which is very, very different, and it's not your off-the-cuff solution that you normally get. At iProve, we identify ourselves as a boutique within an institution. We have a separate and seasoned team on the investment side, and we have a very, very large sales force which is on ground and probably the biggest. Today, we are the fastest growing alternative business in the country with almost 35,000 crores of AUM. Now, this industry is pretty much at the same stage as where the mutual fund industry was in 2016. I'll come to you with data on that. Now, this is the point that I was trying to make. This is the income pyramid of the country. If you look at 2005, 2018 and 2030, what you clearly see is the higher income brackets is becoming bigger and bigger part of the income pyramid of the country. Now, from 8% of population, it's already at about somewhere around 30%, and it will move towards almost 51%. So this is a huge shift. Even if the numbers are off here and there, what you need to focus on is the magnitude and the direction of change. And that's where the big opportunity actually lies. You can clearly see the income levels. The family incomes less than $4,000 in purchasing power parity. Once it moves into the 8,500 to 40,000 or greater than $40,000, then the ability to manage that income pool is quite massive. So as the cohort increases, if you don't do this, somebody else will, because that is what the customer and the investor is actually looking for. So it's quite important. So this is something like, if you take today's example in terms of retail, even though the modern retail companies are doing well, suddenly we have 2 years back, all of us were wondering, does anybody need a 10-minute delivery? Quick commerce. All of us said, who wants 10-minute delivery in India? India is a value market. But suddenly you've seen huge shift into quick commerce. Why? Because the customer is moved. And if you don't provide that offering, somebody else will, and that business moves to that quick commerce company instead of a modern retail or a general trade kirana store. If you don't give that offering, that customer actually starts moving away. So this is something that, and this is happening in business after business. If the companies or if the individual who's providing the solution doesn't move with the client needs, then the client moves. So it's very, very important that you have to look at how the industry is actually shaping up. And here, so this is the growth in HNI related asset class over the last 8 years. You can very clearly see that PMS and AIF have already started having 36% of a HNI's equity portfolio mix. This is, so even if you are not offering this solution to your client is already starting to move away. Look at the CAGR growth in this category. Now, advantage with alternates is, like I highlighted, there is a growing demand. Second, there is flexible fees. You have the option, instead of just a standard fees, you have options of fixed fees, performance fees, hybrid fee models, bespoke fee structures. So whatever, depending on, so there is enough skin in the game based on which way you want the AMC to kind of work with on these fee models. Policy support, the regulatory environment for fiduciary duties is still evolving, but it's kind of progressed a whole lot over the last decade or so. Innovation, there are huge customized solutions that we are able to offer. So to that extent, actually today, when you look at our offerings itself, we have about 15 different strategies that are currently running. While 3 or 4 of them are very popular, there are 15 different solutions that we are able to offer, and these are all need-based, and as clients are starting to ask for it, we are able to tailor this accordingly for them. And last, growing penetration in each and every part of the country. This is particularly growing, and especially in the wealth management segment, this is growing big time. This was the part that I was actually trying to tell you, that equity PMS AUM as of March 24 is upwards of 3 lakh crores. Cat 3 AIF AUM is another close to 1,50,000 crores. And so put together, this is about 4,55,000 crores. And the mutual fund HNI AUM is 8 lakh crores. So you can clearly see that this is no more a small number. As people's wealth within even mutual fund folios is increasing, people are starting to look for these kind of solutions. This is something, this is no more, like I said, this is no more an alternative. About ICICI Prudential Alternate Investments, this is us. Long only strategy itself is today upwards of 30,000 crores. We were less than about 3,000 crores 2 years back. So we've kind of really leapt forward with, by offering, this boutique within an institution sort of framework. We have a very seasoned team headed by Mr. Anand Shah with over 25 years of experience. I have about 20 years of experience. My colleague Gitika, Sandeep have each 16 to 17 years, and Manan again with 8-9 years of experience on the investment side, and a pretty large dealing team. In addition to that, the sales team is about in excess of 50 people across the country who will be able to provide support to you on ground. So this is a huge difference that we bring to the table, and we've kind of seen this journey with a lot of MFDs across the country. Just to cite an example, in Jamnagar, we started this relationship with one of the MFDs there, and he's been able to increase only our offerings in excess of 200 crores over the last few years. So this is the kind of scale up that is possible if you are in a market where there are enough high net worth individuals, and you're able to provide the offering to them with the sales and service and support that we can bring to the table to support you. This kind of a scale up is possible, and our team members are more than happy on ground to help you wherever we can. And we are not only limiting ourselves to just the pure long only equity strategy. There are solutions today on the private capital and debt side. There is a long short strategy. There is a real estate offering. So all in all, we have a pretty rounded product suite. This is what we both on the equity and debt side, we already have offerings, and we've started focused offerings on focused equities, which is long short, performing credit, and real estate yield funds. These are in performing credit, typically the products are in the range of about 12 to 14% sort of yields. In real estate yield fund, which is the office yield optimizer, it's a fully built commercial property which is on lease, which is the underlying property, and you can generate returns depending on the, because it's every 3 years you have a 15% rent escalations, you have upsides on that, you get better commercial yields, commercial property yields, and on top of it, if there is a improvement in the real estate value, you make money on that as well. So historically, the products that we've been able to do here have generated returns, in early to mid-teens, which is again a pretty interesting product feature which is there. Our team members will be able to help you with it. We are working on more products, next focus areas, as you can kind of see, and we'll keep filling these. So as your HNI and ultra HNI client needs keep evolving, we are there as an AMC to help you in this journey. As the needs increase, we will be there with the solutions. And the big benefit that we have is we have a large research team which is unparalleled across in the investment industry today. They track about 600 stocks in the country. Not even the largest credit rating agency in the country tracks so many stocks, and we are able to bring a very, very seasoned investment team to the table to help with managing the investors' money across cycles. This is how we've been able to kind of shape up. This is the overall alternatives AUM. This is what I talked to you about, how this is kind of evolved. And just look at the number of clients. This is more important for us. While the ramp up in terms of AUM is there, you can clearly see more important is the ramp up in the number of clients. That's a journey. I think it is there. The market is there. It's up to you if you can take these products to your clients. Why boutiques versus traditional asset management? Boutiques typically were preferred for size and focus, typically smaller and independently operated, personalized service. You get to meet the investment team and thing. Flexibility and agility, focus on core. So they only focused on a small area. And performance, if you can provide a expected, if you can provide a alpha over the other alternative strategies which are there. Now, what we bring to the table is we are a traditional asset management company, but we act like a boutique. That's our biggest advantage, that we have a separate team which works like a startup, if you can say so. So we are able to tailor that need, but being part of a larger ecosystem. Now, what does being part of a larger ecosystem allow you to have? It has top of the line risk management, top of the line operations management, top of the line sales support at the ground level. In each and every city that you can kind of think of, it's a brand that is very well known, accepted and loved for giving the investment experience that historically you've all would have seen with the brand. And in addition to that, our capabilities, we've been able to stitch up strategies which are across market caps, be it a small cap, be it a mid cap, large cap, or investment styles, be it value or a contra-oriented fund or a growth leaders fund or a strategy which is very high growth. We've been able to tailor these kind of strategies for the investors. And depending upon the investors' needs, if they think they are okay with a flat fee model or a hybrid structures, we've been also able to do that. And there are also thematic strategies, so which we help co-create. Now, here is a case 3 years back, somebody came to us to co-create a strategy. We had kind of come up with this idea that the capex story in the country and B2B story in the country is going to do well. And one of the distributors out of Bangalore actually picked it up, and we co-created this product, and they gave to their clients. And today we've returned money after tripling. Okay, so we are also able to kind of identify such points in time, where we think there could be certain themes which could be of particular importance, and create a strategy for that. And then once that strategy is kind of played out, we've been able to return money. So and we are the only AMC which has done this in the past, with 3 or 4 strategies now. I'm sure most of you would remember in 2017 when we returned money in our flagship pipe strategy to clients in January of 2018. We did that, and since then we've again begun our journey, and we are able to work with investors and give them a good investment experience in this phase. These are our flagship strategies today. As we speak, this is on the left is your PMS offerings, which is contra strategy, which is almost now close to 10,000 crores. Pipe, which is a small cap strategy, which is almost about 7,000 crores, and growth leaders, which is a flexi cap strategy with growth at reasonable price investment style, having a AUM of about 1600 crores. AIF offerings, again, AIF is a slightly different platform. It's a unitized version. So there again, our growth leaders fund series has taken off quite well. We are in the 4th series today. Cumulatively, they have close to 4,000 crores. Equity opportunities AIF, we now have 2 series, and the AUM there is close to about 2,800 crores. And the emerging leaders, which is mid and small cap, is again a 2nd series which is on with close to 1,200 crores of AUM there. These are typically what we have. It will be a tight portfolio, ideally between 30-35 stocks. Active share versus the index is very high. We don't hug the index. So if you look at the active share versus the index, it's almost about upwards of 80%. So it's away from the index by about 80%. So it's not a index hugging strategy. There is a fair bit of high conviction names that we own in the portfolio. Overlapping, but that said, overlapping companies with the index is also not, you're not going to own completely unknown names. We are typically not the first ones to identify a name, but we have very, very deep expertise in identifying these names and holding it for longer. So that's why overlapping companies versus index is also quite high in the contra and growth leader strategy at about 87%. In pipe, it is slightly lower at about 52%. And we've been able to give this kind of investment experience to the clients. What we want people to focus on is the more longer term strategy performance. Obviously 1, 3, 6 years matters as well, but ideally what equity is a long term product, so please look at it with a longer term lens in mind. And here also, when you allocate money on the equity side, humble request, please do the asset allocation and allocate only the equity portion of the money to pure equity strategies. I'm sure most of you being seasoned investment professionals yourself would be doing that asset allocation exercise for your clients. I'll kind of stop here and probably take, if there are any 1 or 2 questions I can take.
Any questions to Mr. Chockalingam Narayanan? He has been very candid. Please allocate only the money you intend to allocate to equity into equity strategies. I think probably that was the most single takeaway from what he spoke.
Yeah, yes, sir.
So, could we?
Okay, so if you kind of look at the strategy per se, it is not like we don't, it has 87% of the companies overlapping versus the index. The index here is BSE 500. So 87% of the portfolio is part of BSE 500. But when you kind of take active share weight to weight, it's 83% different. Let's say, for example, a certain company on the index is 10% and we don't own it, that's active share. or if a certain company in that index is say 0.5% and we own 5% of it, then it is 4.5% active share. So in that sense, if you were to take a like-to-like mapping of the index weight versus the portfolio weight, only about 17% of that portfolio is matched with index weights. 83% is away from the index in terms of weightings. Okay, so in that sense, what we are essentially trying to tell you is we are not buying completely unknown names. We are buying, the portfolio has more well-established names, but within that, through our research, we are able to identify those set of companies which can give you a good investment experience by being part of the portfolio. We look for only three things. We don't constrain ourselves saying we won't invest in, say, public sector or B2B companies or B2C companies or this or that. We only focus on one thing. A company should have earnings growth, ROE improvement, and it should be available at a reasonable risk reward. If you have the first two, which is earnings growth and ROE improvement, it is a trait of a good company. But when does it become a good stock? Is if it can also give you a good risk reward. That is the reason that we have this combination of three. Now you can only do this if you have a large research team, which is what we are bestowed with as being part of ICICI Prudential. We have a large research team, an army, which covers 600 stocks. So that allows us to participate in this manner.
Thank you.
Thank you. Thanks everyone. Thanks a lot for the opportunity.
Sir, please stay there, sir. Can we have Mr. Vijay Kumar Pillai, the head of ICICI Prudential Mutual Fund in Kerala, to kindly come forward and join Mr. Chockalingam Narayanan on stage, please. We would like to have Mr. Anil VK from Kottayam to kindly come forward and hand over a token of our appreciation to Mr. Chockalingam. Along with Mr. Chockalingam, Mr. Vijay Kumar Pillai, the head of ICICI Prudential Mutual Fund for Kerala.